Evening, everybody. We're having a nice, pleasant evening here in Pittsburgh. A nice fall evening. All right. Guess we don't have too much special going on tonight as far as our session, other than observe the obvious, and we're going to go through the obvious tonight.
Price crossed above simple moving average, 100.
So as we can see, the market is not heading in any great direction. Right here at the same level it topped out before. So this would be, I'd suspect that we're in a J-hook pattern, but the Dow is kind of reflecting that. The NASDAQ or the S&P 500 not really showing any direction yet. The NASDAQ trying to do a little J-hook pattern, and the transportation index still in a slow uptrend, but not in any great hurry. So with all that combined together, we're not in any great uptrend, but the nice thing is we've still got plenty of good stocks acting well and plenty of short positions acting well. So let's take a look at some of the other things. No, not Colgate. We want, whoops, crude oil. Crude oil is still in this big downtrend. We're not really supporting at any place. Next support area is right down here to fill this gap, puts us back into about the $87 area. Let's see, gold. Gold's still in a downtrend. Nothing to get real excited about here. Obviously the same thing happening with silver. Steady downtrend. And let's see, what else we got? The dollar. Well. Dollar's moving up very nicely. But notice where we are right now on the dollar chart. And this is why I want to say notice, because notice how far away we are from the T-line. And it's just a common occurrence. The further away we move from the T-line, the more likely they're going to come back and test it. So that just gives you that little extra warning to say, all right, it might be time to take some profits. Same scenario on the euro that's been backing off. Notice where it is now. They've gapped it down and they're taking it away from the T-line. In the oversold area, this is definitely where you start watching to see if there's going to be a reversal. 10-year notes, pretty much moving sideways, not showing us that there's any great concern with interest rates right now. And soybeans still in this downtrend. Let's make this so we can see it. Still in a nice steady downtrend. Now I was long live cattle, but went short today. And right now it's up a little bit, but we're in the overbought area. We have a dark cloud, and again, notice how far away we are from the T-line and where this is topping out, right at the same level. Dang, I hate that thing. Topping out at the same level it topped out before. So again, when we take the evidence of what's happening up here, which is a possible sell signal, and we can see that it's right at the same level it topped out before, and we can see that it's that far away from the T-line in the overbought condition, that's all kind of logical spots to start taking some profits. We had that same scenario occur today in the lean hogs, Those lean hogs had buy signals, came up above the T line, and where did it go to? Right to the 50-day moving average and did a bearish engulfing signal. So if we know what the characteristic of price movements are based upon human nature, we'll probably see it come back, test the T line. If it stays above the T line, it's going to do a J hook and start the next wave up. So if I didn't catch this wave, at least we can be prepared to catch the next wave to the upside. And that's what we want to do with quite a few of our stock positions. And let's see. The only other thing I'm playing right now is cotton. And cotton, even though it bounced up today, stochastic still heading down, still looks like a wave 1, wave 2, heading down into wave 3. So that's all we got over there in the commodity side. All right, some of the stocks. This is where we want to kind of observe the obvious. The obvious is as long as they don't trade this below the T line, you stay long. This is a tweeter, and now it's done kind of that little fry pan J-hook type pattern. This one can still be bought on positive trading. I don't know. Okay, we're going to figure this out here real quick. That doesn't do us any good either. Well, shut the butts. So anyways, so this is why it's a lot easier to be making money knowing what a price should do. Tesla in an uptrend until they can close it below the T line. There's your fry pan bottom. There's your J hook. There's your second J hook starting to set up. BLT. So this is we're owning this position, and the reason we're owning it is because they haven't been able to close this below the T line. So we've had this strong price move back up into the trend. Now we'll just hang on to it as long as it doesn't close below the T line, probably in a 45-degree. JGW, strong price move. Let's make this a little bit bigger. Now we've got a left-right combo, J-hook type pattern. Isn't Twitter an evening star? No. No, an evening star is three days. Now find an evening star for us. But no, that's more of a J-hook pattern. There's no sell signal yet. And notice your stochastics are starting to curl back up. Plus, remember, you're looking at where your signals are occurring based upon where they are in a trend and whether that trend is producing a pattern or not. Right now, this is more of a pattern that's telling us to stay above the T line and doing J-hook patterns. Why? Another little breakout because of the doji sandwich breaking out through this level, telling us there's probably more upside, which we're probably in process right now. We want to stay long on ARWR because it can't close below the T line after this big rounding bottom and then a gap up. Remember the other day it gapped up through this level? It's staying up above that level. That tells us they're not selling this one off, obviously. You just want to stay long on this one. So any of them that are not showing any sell signals, you just hold on to. ZLTQ, kind of that little fry pan bottom morning star breakout. Look for a 45-degree until you see a sell signal. A doji sandwich. We'll get to a doji sandwich, all right? We bought FOLD today because of it coming up a fry pan bottom and doing the J-hook pattern. Notice it could not close. And the J-hook pattern is that very slow curve. When it pulls back, you start seeing little buy signals, and they start taking it back up. This one can still be bought and probably be recommended tomorrow on a positive open, telling us if it breaks out through this level, we're in wave 3. So if we've gone 3.5 points, look for it to move up into the $11 range. Okay, I can review. We're going to be getting to BDSI. BDSI, fry pan bottom, J-hook pattern. Now, there wasn't a real buy signal here other than the fact that when they pulled it back, they took it right back up above the T-line. Now, is that a reversal signal? Definitely not. But what it basically is telling us is if we can look at the whole chart, fry pan bottom, J-hook pattern, makes it much more easy to identify that this one, when they opened this positive today, they were breaking out through this level right here, telling us we were in another wave, which means we could probably have another 4 points to the upside, taking us into about the $21 area. Let's see, that was, well, we were going to do that. Oh, we were going to do that one next anyways. And then TGTX, kind of a fry pan bottom, broke through the 50 on a gap up through the 50, consolidated, told us they couldn't get back down below the 50 or the T-line, and started trading it positive today. As soon as they broke out through this area, we were buying some more because that told us there was still going to be plenty more upside. Now where's your next target? Where everybody obviously is watching to see if it's going to come up here and test the recent highs. Is BDSI a variation of my voice is going in and out? All right. I'll try to make the in part stay in and the out part go vice versa. Was BDSI, what was a variation of the kicker signal? Not that I know of. No, no kicker signal here, just kind of a J-hook type pattern. Let's see, and Yelp. Yelp also has that J-hook pattern setup. And what's the prerequisite for a J-hook? Strong price move. So anytime we see a strong price move and then it's pulling back and not real decisive, get ready for that next move, because this is the information we were kind of analyzing, is that there was somebody in here buying this very strong, then they were doing profit taking, and if they get right back into it, they're going to continue to buy it on a very strong basis. INFI will probably be on the recommended list tomorrow. Let's make this a little bit bigger. And I wanted to show this chart because anytime you see that gap up and then they consolidate it, all we have to do on a visual basis is see when the consolidation's over, when the profit taking is over, and then they start coming back in. Now, the reason they start coming back in is because they've already given us the message that somebody was trying to get into this with great enthusiasm. Then there was profit taking. Now all they're doing is continuing whatever the force was that created that great enthusiasm. INFN, another J-hook type pattern. Notice your slow curve, fry pan bottom breakout, and now you've got, let's make this a little bit bigger, kind of a little J-hook type pattern with a gap up. This tells me the consolidation's over. The strong price move is still in progress. PVCT. Get ready for this one. This one's in the wrong place. This one should have been down. I've got a whole list of fry pan bottoms that are working. This one you can be buying on positive trading tomorrow. The volume is good on this stock. It's a biotech, which means they could just skyrocket this one at any time. But this is the time to be buying, is if they break out through this level right here, you can definitely be buying this stock. OVTI. And again, the reason I point out these patterns is all stocks are going to go up, or all boats are going to rise in a rising tide. We want to find the ones that are going to rise very quickly in a rising tide. And we know what happens when they break out of a fry pan bottom. If the market's still not backing off, this usually means there's going to be a very strong price move to the upside. So you want to keep an eye on this one. Now, I'm going to backtrack a little bit here also to say, if I was buying this one, If I didn't buy it today and it opens positive tomorrow, I'm buying immediately. If I was buying calls, I'm going to buy them immediately, because what do you think the enthusiasm is on these calls here for the last 3 weeks? Absolutely nothing. So right now, buying the calls right in here, there's still not any great enthusiasm going on in these stocks, or in the stock price, or in these option prices. So you're buying the options without any big premiums built into them, number one. And then if they break out, you've got a double whammy going for you. The price is moving big and the enthusiasm picks up, so the prices of those options kind of escalate very quickly. TXLW, left-right combo, gap up, makes it very simple. If they open this positive, you buy it immediately. It tells us the 50 is not acting as a resistance, tells us they're going to move it in the direction of how they open it after a doji, which means there's still a lot of force in this one. Plug also did a Morningstar signal right on the 50-day moving average, closed right at the T-line. Makes it very simple. If they open this positive, they're confirming this whole area and also telling us the T-line is not acting as resistance anymore, that we're now in wave 3, which wave 3 could at least be possible going up to, I hate that little gray thing, back up to the 650 range, which still gives you a good, that's a good 30% move. And that was plug, right? Power. Power, this signal looked more like a hammer signal on some of the other charts, but notice where it bottomed out, right? Smack dab on the 50-day moving average, then a bullish confirmation. If this opens positive, you want to be buying immediately, because where do you think your next target is going to be? Right up here at the next resistance level, the 200-day moving average. That was power. We also have glue. Glue, bullish confirmation, gap up through this level. You want to be buying this one on positive trading. Next target is going to be the 50. If they get to the 50, they're breaking out through this level, which means your next target is filling the gap up here at the 650 area. And again, these charts are basically showing us that there's a lot of buying strength coming into individual stock areas. FEYE and hammer gap up, closed right on the 50-day moving average. If this opens positive, what's it telling us? It's telling us the 50 is not acting as a resistance. There's lots of power in this move, and they start breaking out through this downtrending channel. Where do you think our next target is? Up here at the next resistance level. JRJC had been backing off, now starting back up. Not a reversal signal, but I would be looking to buy this on a J-hook type pattern if it opens positive. Would you stop, have your stop be at the halfway point? No. If this opened positive and started trading positive, I wouldn't want to see it close back below the 50. If it closed back below the 50 doing a shooting star, that's telling me this downtrend resistance level is still acting as resistance. So again, that's nothing more than what is the visual analysis of this trend. If this starts trading positive up here, it's broken this level. If it came up here and then closed back down here, it's telling you they weren't going through this level, close out the position. Let's see, what am I looking at? SGI. That's a kicker signal. Opened here, closed here. Gapped up, opened above the previous day's open and moved positive. Next target is the $11 area. And, oh, that's where I saw it. GALT. GALT, another one that can be bought. Let's make this bigger. This is what you kind of call the stutter step. Had a nice move, a pullback, and now another buy signal telling you the profit taking's over in this first move. Next move is on its way. Where's the potential target? Obviously up here at the 50, which maybe over the next week or so is going to be correlating with this high right here. Okay, let's see. Now, the fry pan bottom has just made me tons of money here in the last few weeks. Facebook is doing a fry pan bottom. It can be bought on Positive Trading. Why? Because we got a fry pan bottom, and look at what happened here in the last couple of days. A Morningstar signal, which usually indicates a slingshot effect to the upside, which means they're breaking out of this fry pan bottom. I've been commiserating because I didn't buy more of this one. Notice the big fry pan bottom, and where was it going to break out? Right here at the 200, which it did. So this is the exact type of visual setup that you want to be watching for either a day trade and or an option trade, where you can be buying right at the appropriate time. So, and this is why this keeps you out of situations where you don't have to be sitting around waiting for your option trade or your stock trade to start moving. Fry pan bottom, gapped up through the resistance level, been in a strong price move ever since then. And remember, this is a strong price move based upon what's going on in the market in general. It's just been moving sideways. So that's why working with the patterns or staying with the patterns are going to produce a much higher degree of profitability, even if the market is flat, because the pattern itself is going to work itself out based upon the information that's already building up that created the pattern in the first place. Again, that's why we were buying TGTX. Isn't this up toward the overbought area? Certainly is, but it's coming out of a fry pan bottom, which means this is where the enthusiasm is starting up very quickly. Blocks. Another example of when they gap something up, that's giving you information. That tells you there's a new enthusiasm. This one can be bought on Positive Trading tomorrow, because what it basically has told us is they're breaking out of the fry pan bottom. There was profit taking. Today they said the profit taking is over. That means we're still heading up based upon this strong buying that came out of the that broke out of the fry pan bottom. Making good money with HBI. Exciting, just a nice fry pan bottom, J-hook pattern. I just stay long until I see a sell signal. IMPV. Notice what it's setting up right now. This little fry pan bottom. If it breaks out through this level, where do you think the logical target's going to be? Up here. Or there's a trend channel in here. Up here at least, you're going to get a pop of 2 or 3 points very quickly. KPTI, you're kind of your fry pan bottom with a dimple in there. Wouldn't be afraid to be buying this one on Positive Trading. And RLD. Nice rounding bottom. And where are we right now? At the 50/200. If it opens positive, this whole pattern is going to start breaking out. Then you've got kind of a fry pan bottom scoop pattern. So you're saying in general, if the stock market is trading sideways, then patterns produce better. No, I'm saying it the other way. But even if the market is moving sideways, your patterns are going to produce a lot better results, because that is a force that's building up in spite of which way the market's going. Do you watch the daily real time at the open up to 10, 15 minutes or lower time frames to buy at open? No, I usually heroes just watch what it's doing on the open. For example, we're going to start getting into some of the shorts. And so the market opened up positive, the stock opened positive. But what was all the other evidence that this is heading down? One, we've had some sell signals in here. Doji, little shooting star, hanging man, bearish engulfing, bearish doji sandwich, closed below the T line, rolling over, and it opened and traded positive. So where was the best place to go short on this? If it came back down through the open and or yesterday's close, because that told you that the chart was still in progress. It's still going to go in the same direction as what all the other indicators were telling us. Oh, let's see. Can you go through JRJC? JRJC, it's got a J-hook type pattern setup. It's not a reversal signal, but it is one that I would still be buying if it opens positive, because it's probably going to have a pop-up in a possible a J-hook pattern. Tons of money on FPB moves. Fry-pan bottom moves. Okay. Can you make tons of money with stocks, or do you depend on calls? Can you make these tons with spreads alone? You make money based upon what you're comfortable with, Jay. There's people in the room that want to trade stocks because that's their comfort level. There's other people in the room that want to trade options because that's their risk factor. They want to be more aggressive. And there's other people that want to have a combination of both. They've got both options and stocks in their portfolio. So whether you're trading the difference between a spread and a call outright is up to each individual investor also. Depends on what their risk factor is. And again, when we go through our option trainings, I'm usually buying the spread somewhere between 2 and 3 weeks prior to expiration, because the maximum price you're going to get on your spread is on expiration date. So Jay, I see you keep coming up with questions on what is the right option strategy, or what is the right strategy. Again, that's up to each individual of what they should be doing. So it's better to buy the options when it looks like it's going to break out, so we don't pay big premium. Well, you can. That's the advantage of some of these charts. When you're just about ready, let's see, there was one that looked like it was time to be buying. OVTI. OVTI, I'd be buying on positive trading tomorrow. Now, you can either be buying the stock if you're a stock investor, or you can be buying the calls with the right timing. But you don't want to place stops on your options, John. You're not buying the options based upon a price. You're buying the options based upon the based upon what the underlying stock is doing. So you have contingency orders. You can say, all right, let's pick out one. AMBA. Let's say you got good profits in your options. Where would be a spot that would tell us we want to be back out of this trade? Probably if it came back down through today's open again, that would tell us the sellers have now taken control up here. So if it came back down through today's open, I want to close out my options. So it's not based upon the option price. It's based upon what's going on in the underlying stock. Okay, so there are some good shorts you want to look at. Now, this is a perfect example of when to be going short on a stock. This is Schlumberger. Downtrend, came right back up, failed at the 50. And when people buy down here, they say, what's your target? My first answer is usually watch to see what it does once it gets for the first major resistance level. And I say watch to see what it does, because if it does a big bullish candle and goes through, the 50 is not acting as resistance. If it comes up here and does indecisive trading, at the time your stochastics is starting to roll over, that pretty much tells you what's happening at that resistance level. They're still resisting. AEM still working as a nice short? Yes. And notice what it did. When it got up here and then did a kicker signal, where was the logical target? I would still stay short until it comes down here to the 200-day moving average. We shorted GEVA the other day because where did it hit? It came up, smack dab to the 50, did a doji, gap down through the T-line, doji sandwich. We're staying short until we see a buy signal confirmed. Now, because of the price move already, the further this moves away from the T-line, the more it becomes a price signal, a reversal signal confirmed versus a buy signal and a close above the T-line. Now, if this was staying very close to the T-line, yes, then it would be a buy signal and a close above the T-line. At this point, when you move away from the T-line, you say, all right, I want to see a buy signal confirmed because that tells me they're probably at least going to bounce back up to the T-line. OC failed right here at the 50 with a doji down through the T-line. Which way is this trend going? It's moving an overall downward trend. So what's that tell us? If this opens lower tomorrow, what type of signal are we going to have setting up? A doji sandwich, bearish doji sandwich, which implies that the downtrending channel is still the target, which means they could bring it all the way down here into the $29, $30 area. Cree failed at the T-line. Which direction is it going right now? It's in a downtrending channel. Where's our likely target? Looking for the bottom of this trend channel, which means they could bring it down here into about the $41 range, 41.5. We shorted sale today because we went through this chart because of all the evidence that this was selling off, even though it traded positive today. When it came back down through today's open, that told us they failed. They were still taking this down, confirming everything that we already knew was showing us sell signals in this this chart. CRK, this one price heading down to the bottom of the trend channel, still more downside. TRLA, first likely target is probably the 50-day moving average. Where did it start failing? With that left-right combo, bearish engulfing, right here at the T-line. What did this tell us about the possibility of an uptrend? Told us this was telling us they weren't doing it. They were rolling it over and still heading down. Does inverted fry pan and J-hooks work same? No going short? Yes. The inverted fry pan is your dumpling top, and your bearish J-hook is a bearish J-hook. Zillow, there's your dumpling top, opposite of a fry pan bottom. Let's see, I don't know what this line is, but we will remove it. If this breaks this level, which is already done, that becomes your next likely target. Wouldn't be afraid to be shorting Zillow. Oh, somebody mentioned, by the time I figured out they weren't saying good morning, whether it was time to short GM. Yes, GM wave 1, wave 2. Notice your doji gap down. If it trades lower, it's breaking this level right here. Look for this type of move. That was a 5-point move. This should take you down into the $29 range. Kate, K-A-T-E. Look how this one's just now rolling over. Is there any significance of selling going on? Well, that told you there was a huge sell-off, and they haven't been able to get that healed up. They're still rolling this one over. Now, how far out and how far in the money do you buy options? Liddell, that's still a function of math. Try to figure out where your best leverage is for the time frame that you've got available between now and expiration. So sometimes it's an in-the-money call if it's going to be in kind of a steady eddy. or a steady eddy in the sense that it may only be a 3, 4, 5 day remaining in the uptrend in the market. If it looks like it's longer than that, you might go a little bit out of the money. Usually I am buying calls that are the closest month. And the reason for that is the signals and patterns that we're looking at are telling you what's going on right now in investor sentiment. So I don't care what happens 6 weeks or 14 weeks down the road. I'm interested in what is that price move going to do right now. SYG, notice that slow curve and the doji sandwich. This one you want to probably be watching tomorrow if it opens lower. And this is one of the oil-related or energy-related stocks that all seem to be getting hit pretty bad. And CRL, another one. That is your kind of your kicker signal, your trend kicker signal. This one, if it gets through the 50, could take you all the way back down to the 200, which would kind of correlate with this downtrending channel. So anytime you can see a support level that's got 2 or 3 reasons that it's going to support at that level, and everybody else can see that, that means the buyers aren't probably going to be very enthusiastic because they see it's probably heading back toward a resistance level. Or a support level, I'm sorry. Let's see, ADS, rolling over, doji sandwich, right at the support level. This one, you probably want to look at to go short on any weakness in this market. Now, I say any weakness in this market. Obviously, the market was relatively flat today, and this stock, all the stocks we're looking at right now are heading down. Stocks that we looked at earlier are heading up. So we're still in a market condition that pretty much tells us that there are stocks in a downward trend in this market, and there are stocks in an upward trend. We just have to pick out which one we want to go with. Would CLRBX blue ice failure? Oh, no. Usually a blue ice failure is when they fall through the ice, they come up and test the ice and fail, then go down. This has already come up. This is just kind of a rollover. And what else we got here? RAI. Another one that's failing. Now this would be closer to a blue ice failure because it's close enough to the 50 to say, yeah, it's failing here at the 50. Where's your next target? Down here at the 200-day moving average. And notice how they got there today. Kind of a trend kicker gap down. Tells you there's a lot of force trying to get out of this one. Did we do CRS? CRS also rolling over. Doji, hanging man, bearish confirmation. So here's another element that you look at on a chart. Which way do you think this stock is moving? Is it heading up or heading down? Well, if you can look at the chart and say, well, this is pretty much in a downward trend, more than likely when they fail to move up and break out, they're still heading in that downward trend. Just kind of, again, putting as many logical factors in place as we can. Okay, I guess that's about it for tonight. Are there any general questions on candlesticks? Oh, let's see. I was supposed to announce why you buy 2 weeks before expiration, why the greater value is on expiration date. On a spread, Mike, let's see, what spreads did we do today? We did a spread. We did a spread on Fold, which was by mistake, but we bought the Octobers. Now, this is a bad example. The reason you want to do a spread is because the maximum value, and let me try to pick one out here. Shaft, yeah, unfortunately, when we looked at it, I did actually an October spread, which wasn't the right thing, but it's not going to hurt anything. Yes, so that was But a spread, the reason you want to be fairly close to expiration is because if a price moves up, you want that price to move up to your higher execution price right near expiration date. Because if a price moves up well before expiration date, the premium in both the lower call and the higher call are going to keep moving up, kind of parallel with each other, so you're not going to make any profits. But the closer you get to expiration date, the closer or the better your price, or the more your price is going to move to those. Kind of just babbling here. I'm looking at Jose. Jose, a spread is when you buy. I got to pick out something just to use an example. All right, let's say, for example, we still like AMBA, and we still think it's going up. And if we buy the calls, we might be able to buy the 40 calls, and I'm going to pick out a price for $2. Well, that means our break even is at 42 just to break even, and then it has to go up above that. Well, let's say the 40s are trading for $2, and I'm going to say hypothetically the 45s are trading for 75 cents, and I'm just picking out a number. Well, if it goes up, if we just bought the calls for $2, it has to go to 42 just to start making money. And then our percent profit is based upon how far it goes above 42. Now, it's got to move good hefty ways to get profitable. If we buy a spread, we buy the 40s for $2, but we sell the 45s for 75 cents. So that means the net we have in that trade is $1.25. Now what happens is, let's say, for example, it goes to $45 on expiration date, which let's say is on September, I can figure this out, September 19th. Let's just say hypothetically that trade now goes to $45 on expiration date. Well, on expiration date, we've bought the 40s that are now worth $5 because it's the $40 plus the gone to 45, it's worth $5. However, we have sold the 45s for $1.25. For 75 cents that we put into our pocket. So that meant instead of putting out $2, we only had to put out $1.25. If it closed right on 45, that we're going to have to buy back those calls that we sold to somebody for $1.25. But what are they going to be worth at $45? They're going to be worth $0. So we can buy them back for $0. We've basically kept that money in our pocket. So what that does to our leverage is, instead of it had to go to 42 to break even, now it only had to go to 41 and a quarter to break even. And two, for us to make a profit, if it went to 45, our $1.25 went to $5, which is what, about 350%? Well, to make that same money, if we just bought the calls outright, it would have had to gone to 42, and then probably another 7 points above that. It would have had to gone to 49.50 or so to make the same amount of money that we would have made on the spread just going to 45. So I know that was pretty much convoluted because we don't have numbers in front of us, but we will do a session again here pretty soon on the benefits of doing a spread versus just buying the calls outright, and then show the benefits of doing a credit spread versus a debit spread the final week of expiration. Because the sold, that's okay. All right. When identifying a slow curve, do you look more at the candles themselves and say the T line? And how many candles would you consider a slow curve? When I look at a slow curve, all it has to do is give you the identity that there's a slow curve going on. It could be 5 candles, it could be 15 candles. I just want to see if there's kind of a slow curve situation setting up, because this tells me investor sentiment's building up. Now, a slow curve like this is usually more powerful, because it tells you the consolidation after a very strong move is over. This is where I'd start looking for a breakout. Didn't do it there, but it didn't fail. Two reasons: because it's still in that trajectory of a slow curve, number one, and number two, it never closed below the T line. So let's see. Two things that I guess are going to be coming up here fairly soon. Again, on the my little I guess demonstration account where I do the trades so people can see how the trades are working or what trades I put on. Back in, I guess it was about 3 months ago, it was down to $12,500 because I was taking money out to, I think the last car I bought was that 56 Mercury. And so over the last 3 months, it's now built back up to $176,000. So people were saying, well, can you show us how you did that? And I don't really have a distinct or definitive answer of how I did that. It's just a combination of all the things that I look at on a total basis. So we've had some requests to go do a session here pretty soon on, all right, what were the steps, what were the mental steps that you took for identifying the patterns, the signals, and the trades, when to get in and out, and what was your mental thinking process to get that type of return. So the reason I want to demonstrate that is not because I'm any great trader. It's just because with candlesticks I've always made very good money because they've at least put me in the right direction. And more, I want to just prove to everybody that this is not rocket science. The signals and patterns keep working over and over and over. All you have to do is figure out how to take advantage of them. And part of that taking advantage of is how to do your money management so that you're not sitting with the same emotional hang-ups that we always have. And I put we as me in part of that because that's was my learning experience. Is there was a lot of times where I would have a trade that looked all right, but there was a better trade over here, but man, I didn't want to get out of the trade that looked all right because boy, would I look stupid if I closed out that trade that looked all right and moved to a better one, and that one I got out of skyrocketed. So we're going to go through a process. So anyways, I guess the schedule right now is in the next week or so, we'll do an evening of what is the mental process of keeping your emotions out of your trading and how you kind of cultivate your trading so that, and what do you do to set targets and discipline to make sure your account is always moving positive. Why don't you point head and shoulders or triangles or wedges? Why don't you point? Crystal, because they don't occur often enough. I'm not a long-term chart analyst. I'm wanting to see what's happening right now. Yeah, a lot of this was done with options. Again, this was my little option, my trading account. But that doesn't mean that the other accounts aren't doing very well, because even though I made better leverage on the option trades, the stock trades are all doing very well, or a lot of them are. What percentage do you estimate your gains in your account was from commodities? Big Al, I don't know. I would guess anywhere from 40 to 60% of it, but it's all based on the same charts. That I have some money trading in commodities because of the charts, and I have other money trading in options and stocks because of the charts. Susie, I'm going to try to figure out how to do that, how to post the trades at the end of the day. Are those not as powerful as any fry pan? Cristobal, they're just functional. No, I would say the fry pan bottom breakouts are much more powerful. The head and shoulders, all those type of what do I call Western signals are what everybody looks at, and they're so-so. Would you say most of your trades are less than 7 to 10 days? Probably, yes. I would say an average of 5 days. And that all depends on market conditions. Sometimes they're only 2 days. Sometimes they're 10 days based upon whether we're in a steady Eddie type market. Have you thought about recording the morning and afternoon daily sessions for those not able to attend live? I don't know how we would do that. I'll have to figure out. I mean, Jim does our recording, and I don't know how we would. We'll figure out something. Let's see. Problem with commodity trades. 2 evil words. Limit down. That's true, Billy. But the nice thing about limit down is more than likely than not, you're going to be caught in limit down based upon the direction of the trade you're already in versus it going against you. So I would say for every time I'm caught in a situation where it's limit down against me, I'm probably in 10 trades where it's limit positive going with me. Your trades last 7 to 8. Why do you buy October? Oh, Jose, that was a mistake today when I did the spreads. I went right in afterwards and bought September 7.5s on Fold. I looked at the numbers and thought, man, this looks good for a spread. So I hit it and told everybody about it, and then somebody came back and said, well, that was an October spread. And I went back and looked at it, and sure enough, it was an October spread. On long-term picks, do you ever take profits, then buy back? No. WLY or WLL, no, I'm just holding this long-term. Right now, there isn't anything that's showing a devastating sell because we're still at the 50. Now, if it came back and closed below this level, maybe knowing that it'd probably head back down toward the 200, I'd probably close out some of the positions or lighten them up pretty much. Yeah, those are the only two right now as far as long-term picks. We've had Ford Motor Company in for a few years. But those are the two long-term picks. We are in the process of getting people. I've got somebody going to be doing the writing on seasonality and somebody doing the research on long-term picks. There's going to be two areas of long-term picks. One's going to be the biggies like the Fords, the international papers, things that might on a long-term pick basis have good charts. And then we're going to have others that are maybe new technology stocks that are baby stocks that have good fundamentals. I say good fundamentals, have good products that could be changing markets that we're going to have some research people. And those are going to usually be found based upon a breakout of the chart to kind of alert us that there was something new going on with that research. Doesn't long-term criteria against candlestick exits? Doesn't long-term criteria? I don't understand that question. Doesn't long-term criteria against candlestick exits? That you're gonna have to rephrase that, Cristobal. Okay, so I guess I've all right. Let's Jim, let's go ahead and do the double line. And in 4.8 seconds, let's do the next double line. Hold on for a second. I've got a fly that's bothering me here. Okay. No, I was turning off the fan. I was trying to get this darn fly that was bothering me. All right. Hold on. Got a fly here. 30-second smoke break. I'll be right back. Okay, sorry about that, folks. Still doing a little bit of recovery here. All right. THM. All you can do here is stay long. That looks like a good chart. There's your slow curve. There's your breakout, kind of a double slow curve. You just stay long on this until you see a sell signal. Mini, you can buy on positive trading tomorrow. Doing a doji sandwich on this breakout with the likelihood your next target is going to be back up to the 200-day moving average. And data, all you can do here is stay long until you see a sell signal. As you can see, it just barely closed above the 200, which is telling us there wasn't any weakness up here. So we still want to watch to make sure at this point I would be using today's open as my stop. It shouldn't come back down through that level. Fold is probably going to be recommended tomorrow for a buy if it opens positive, the J-hook pattern. And DSW, is another good looking chart with the likelihood of, with that little Morningstar signal. Oh, let's see, somebody asked about a doji sandwich, and I will get to those. I forgot. When we see one in here, we'll get to them. But I wouldn't be afraid to be buying this one on positive trading tomorrow using the T-line as your stop. SanDisk, you can buy this one on positive trading. This is your fry pan bottom, resistance, pullback. Now you've popped back up through. You want to buy this on positive trading. Your next likely target is testing the recent highs up here around the 109 level. And Yahoo, nice breakout. Now you're in the overbought condition. You had a big move to the upside. Definitely have a stop at today's open. It should not come back down through that level at all. Metropolitan has to open positive and trade positive to stay in it. Otherwise, it's probably just coming back to the 50, and then you see whether it supports at that level. And XONE, haven't looked at those. Nothing here yet to get real excited about. You're still in a downtrending channel. You did have buying. You can be buying this one. You just want to watch to see if it can break through this downtrending channel, which means your next target would be the 50-day moving average. NBS, same scenario. You got buy signals. You just need to break some of these downtrending channels. and PGNX. Stay long. Or if you close this one out yesterday, you can buy it back on positive trading today. It tells you the uptrend is still in progress. GILD. Another one that you can be buying on positive trading after this big hammer type signal. If they open this positive back up above the T-line, you've got the J-hook in progress. This tells you they wiped out a lot of sellers before the bulls started stepping back in again. And Halliburton. Halliburton, you stay short until you see a buy signal. Nothing here yet to get excited about. More than likely on this slow drift, it's going to keep drifting slowly until it hits back to the 200-day moving average. Moby, get ready to buy this one on positive trading tomorrow with the doji sandwich. And I'll try to find a doji sandwich to show you what a doji sandwich is. Sears Holding. Stay short. I probably wouldn't be buying this long or short at this point. It's just in a slow drift. I'd be trading something else. It's just having a hard time getting out of its own way. And JP Morgan, as long as JP Morgan stays above the T-line, we know we're in an uptrend. I wouldn't be trading this one just because of the lack of magnitude of the price movement, but it's a good indicator. As long as it's trading positive, the market's not going to be selling off. SWN, stay short on this one. All the energies were getting hit pretty hard. Looks like they're still going to be hit hard because there were a lot of kind of trend kicker signals to the downside today. Glue. Glue is probably going to be on the recommended list tomorrow. That's a nice little left-right combo with a gap up. Still looking for a doji sandwich to illustrate. And see, CFIG. That's CFIG or GFIG. GFIG also, if that was a true hammer, even if it wasn't, you had a nice little slow curve breakout. This one you can be buying on positive trading using the halfway point of today's candle as your stop. Pran. Close a swing on Friday. See more upside after pullback. Yes, wait till you see the profit taking over. At this point, if I was going to buy this one, I'd probably put a buy stop at today's open. If it comes back up through there, tells us the selling has stopped. Boeing got a little kicker type signal. This one you can be buying on positive trading with the anticipation that the first target is the 200, and if it breaks through that, you've got another wave that would probably be the same magnitude as this wave right here. BYD, all you can do with this one is stay long until you see a sell signal. At this point, I'd probably use the 200 as a stop. It shouldn't come back down through there. WLL, stay long term on this one. Yeah, I just stay long term on this one, even though it looks a little bit sluggish at this point. CYN, stay, or CNI, where did I get CYN? Just stay long on this as long as it stays above the T-line. Walgreens. Walgreens I wouldn't get real excited about. It's still kind of caught in this downtrending channel. I'd be trading something else. Netflix looks like it's consolidating. There's a little Morningstar type signal at that today. This one you can be buying on strength. Also, again, if it stays above the T-line. And YY, stay long on this one. Probably moving up to the next level, which would be the top of this trend channel. OLED, you stay long until you see a sell signal. At this point, I'd just stay long. HIMX, you just stay long on this one with the anticipation you're going to have a slow climb up to the 200-day moving average. RADA was just stronger than bear's breath today. This was up big. This is a breakout. Now, this is the type of thing that you want to look at to see after they've had this type of trading, something obviously has changed the perspective of this company. And it's usually on these big, huge breakouts that tells you something big is going on. So this is where you start doing your research to see what's going on behind this company. It may still be a buy, even though it's up 400% over the last few days. It's these big breakouts that tell you there's something new going on. As a matter of fact, I will probably somebody take a look and see what the news is. It's moving this one. And Sealed Air. Just stay long. You might have some profit taking if it opens lower tomorrow. But right now you just stay long until you see a sell signal and a close below the T line. EXAS. Another one, you just stay long. Nice slow, nice solid backing and filling on the way up. KERX has a chart that you can't really identify what it's doing. So you close it out. It shouldn't be long, obviously. If it comes down to the 200-day moving average, you probably want to be short. But anytime you're in a chart where you can't tell which way it's going, close it out. There's going to be too many charts out there that you can tell which way it's going. CRM, stay long. Kind of coming out of that J-hook pattern. And CELG, another one that I wouldn't be real enthusiastic about, but if it can climb back up above the T-line, you stay long on this one. And we did Walgreens, we did Yahoo, VIPS. VIPS, I wouldn't get too excited one way or the other on this one. Let me make this a little bit more pronounced to see if there is. Nah, I think there's better charts out there. VIPS really doesn't have a what I would call a real concise trend. And Hospital Corp. Now that one's got a more of a little scoop type pattern setup. That one I'd be more apt to go after. Apple sideways. It's caught between the T line and the 50. I wouldn't be doing anything with Apple right now until they show us which way they want to take it. And AMBA, you just stay long on this one because it's coming out of this fry pan bottom. This one, you don't know where it could go to. Now, say you don't know where it could go to. The first prospect of where it might go to is right up to this channel, which means they could take this up another 10 points pretty easily to get to that channel. Or if this is wave one, wave three, getting pretty close to the same magnitude, but it looks like there's still another couple points to the upside. So at this point, you just hang on to this until you see a sell signal confirmed. JCPenney, just stay long. PRMW. Nothing here that would tell me to be long or short this stock. No trend to it. I'd be trading something else. ACAD, stay long on this one. I'd use today's open as my stop, a safety measure. And GSAT. GSAT is rolling over. I wouldn't be in this one at all. Nothing here can't go short because it's below $5. So you definitely wouldn't want to be long on this one. Manhattan, trying to bottom out, but still nothing on this one that would get me excited until you see a very strong buy signal coming up through the T line. So far, it's not there. Whoops, S.CFL. That one's not coming up. Zynga, if I recall, doesn't have anything real intriguing either. Just sideways. There's no force in this one. I'd be trading something else. SGI, I think we looked at this one. No, it's a kicker signal. You want to be buying this one on positive trading tomorrow. That might be on the recommended list. JRJC we looked at is got the J-hook type pattern set up. It doesn't have a reversal signal, so if it's moving up, you're a lot more, what do I say, diligent as far as watching to see when it starts selling off. And OTIV, you stay long on this one until you see a sell signal. At this point, I'd probably use today's halfway point of this candle as my stop, because that would bring you back down into the trading range, getting you back out of the, or getting you back into the trading range, which is where you don't want to be. You want to be out of the trading range right now. And ARIA, another one that I wouldn't be long or short. Let's see, Gale we looked at today. This one you can be buying, but it needs a strong bullish candle tomorrow, which would create kind of a doji sandwich. And I'm still supposed to be showing us a doji sandwich. Still haven't gotten the darn fly, no? Tazar, you stay long. All right, somebody, let's see, PVCT. That's a nice slow curve. That one, it's got the slow curve and the fry pan bottom. This one you want to be buying on positive trading. When do you use midpoint versus open for your stops when buying after a large candle? If the large candle is just broken out through a trading range or a resistance level, okay, thank you, Scott. Good earnings. Then I don't want to see it close back below that halfway point of that candle that told me that the bulls were now in control, because that would probably bring them back into the trading range. See, RAD, Rite Aid. Rite Aid, wouldn't get too excited about this one yet either. Still in a downtrend, having a hard time getting through the resistance levels. You can be buying this one, but I'd prefer to buy it after it came up through the 50-day moving average. What does the chart say for, well, we looked at SanDisk. SanDisk, you can be buying this one on positive trading tomorrow. Okay, here's a doji sandwich if I can. Doji sandwich is when you have a bullish candle, then a doji. And we know the simple rule of a doji. They're going to move it in the direction of how they open it after a doji. So if you see a bullish candle and a doji, if they open it positive the next day, usually that next day's magnitude is going to be the same magnitude as the candle prior to that doji. So plus afterwards, there's going to be a high probability you're going to see more upside. I'll keep doing doji sandwiches when I see them, just to give you a better explanation. CSUN, whoops. CSUN, there's that slow curve breakout. This one you can be buying with the anticipation your next target's the 200-day moving average. Now, this was a breakout. So if it closed more than halfway down this candle back into kind of the trading range again, you close it out and wait for the next buy signal. HZNP, little bullish engulfing or bullish confirmation. You can be buying this one. I wouldn't be buying it yet. I'd rather see a breakout of the kind of this congestion area. If it starts breaking out, first target, second target, fill in the gap. Kind of a fry pan bottom breakout on ALLT. Not more, yeah. If you can see this rounding bottom and then breaking out, yes, you want to be buying this one. The prospects are likely it's still going higher. And GPro, just stay long until you see a sell signal. THRM did a doji sandwich today. Yeah, usually, yeah, that's pretty close to a doji sandwich. Had a bullish day, doji, and open positive. This magnitude candle is usually about the same as this magnitude right here. Would you PVCT, would you set a buy stop at something like 118? Yeah, you could. Or be real safe, just put it at 120. If it comes up through 120, it's broken out through everything coming out of the slow curve. At this point, 118 versus 120 doesn't make a big hill of beans. If it goes through 120, more than likely it's going to go up another 30% after that. So it didn't matter whether you bought it at 118 or 120. You just want to make sure you got into it when it was coming up through those levels. BDSI, this one had a gap up, so you stay long until you see a sell signal, but right now I'd put a sell stop at today's open. It shouldn't come back through that level. And Mobley, another one you just stay long until you see a sell signal. Okay, all right, we've kept you over time again. All right, lots of good things going on in this market, both long and short. Don't really have to have a market trend. Can we buy on a positive open? Yes, but I would anticipate this Morningstar signal with a gap up. The trade would be, first target is up here at the T-line, so you do it as a trade. And Pixel, yes, you buy this on positive trading tomorrow, but it needs to open positive. If it opens lower, you don't buy it until it comes up through today's high. Okay, everybody, we'll call it a night. We'll see everybody bright and early in the chat room. See you then.